Hey everyone, welcome back to Corporate Decoder. Today APCX just filed an 8 confirming the results of their annual shareholder meeting, and I am seeing a few key details that matter for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its shareholder meeting and voted on several important proposals, including director elections and approving an equity incentive plan. This filing is a current report, essentially an update to the public on important events. AppTech Payments Corp, or APCX as it is known by its stock ticker, held its 2026 Annual Shareholders Meeting. This meeting is a big deal because it is where shareholders get to vote on important company matters. The meeting took place on May 28, 2026. They needed to have a certain number of shares represented to make the votes official. Out of over 40 million shares eligible to be voted, about 27 million were present either in person or by proxy. That's a pretty good turnout, meaning the votes should be considered legitimate. One of the first big items was electing directors. They needed to elect 2 Class 2 directors to serve for 2 years. Albert L. Lord got a strong vote of confidence with over 24 million votes in favour. Thomas J. DeRosa also got elected, though with fewer votes for him compared to Mr. Lord. It's common to see some votes withheld, and there were also broker non-votes, which means the broker holding the shares didn't receive voting instructions from the actual owner. Next up was a say on pay vote. Shareholders voted on approving the compensation for the company's top executives. This vote, often called a say on pay vote, is advisory, meaning the board doesn't have to follow it, but it is a strong signal of shareholder sentiment. The majority of votes were in favour, with over 22 million votes for it. However, there were also a significant number of votes against and abstentions, showing there is still some disagreement about executive pay. Following that, shareholders voted on how often they want to have these advisory votes on executive compensation. The overwhelming result here was for a vote every 1 year. This suggests shareholders want to have their say on executive pay annually, which is pretty standard. A very important vote was on approving the 2026 AppTech Equity Incentive Plan. This plan allows the company to grant stock options or other equity awards to employees and directors. Approving this plan is crucial for the company to attract and retain talent, especially a smaller company like AppTech Payments Corp, which has only about 6 employees listed. Over 21 million votes were in favour of this plan, indicating shareholder support for management's ability to use equity as a compensation tool. Finally, shareholders ratified the appointment of DBBM Sekinen, LLC as the company's independent accounting firm for the fiscal year 2026. This is a routine, but essential vote to ensure the company's financial statements are audited by an independent party. The vote was overwhelmingly in favour, with over 25 million votes to ratify the appointment. This builds confidence in the accuracy of their financial reporting. Looking at the broader picture, this filing shows a company actively engaging its shareholders and moving forward with important corporate governance. The approval of the equity incentive plan, especially for a company with a small employee base, is a strong signal that they are looking to grow and incentivize their team. The report is signed by Thomas DeRosa, the Chief Executive Officer. This means the information presented has been reviewed and approved by the company's top leadership. It's interesting to note the recent news about AppTech Payments Corp, which included them beginning trading on the OTCQB and some director and officer departures back in May 2025. This annual meeting and the votes that took place suggest a period of stabilization and forward-looking planning after any such transitions. For a company trading on OTCQB, things like equity plans and auditor ratifications are fundamental building blocks. The fact that the warrants APXW are also listed with an exercise price of $4.15 is also important for understanding the capital structure. While this filing is about the shareholder meeting and not direct financials today, the approval of the equity plan could potentially lead to future dilution for existing shareholders if those options are exercised. Overall, this filing appears to be a procedural one, confirming shareholder approval on key matters necessary for the company's continued operations and future growth strategy. The overwhelming support for the equity plan and the auditor appointment show a level of shareholder trust in management's direction. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.